Morning and welcome everyone after the Thanksgiving holiday for our Tuesday/boot camp session for December 1st, 2020. My name is Faith Ritchie and I'm the Arizona Commerce Authority Small Business Programs Manager. Before we get started with today's webinar, there are updates that I would like to make known. First and foremost, if you were able to join us for our 100th session last week, as always, we must give thanks to our amazing community partners who without them, we could not have made all of these 101 sessions possible. As you are all aware, the ACA Small Business Bootcamp and Resource Collective was designed to help prepare small businesses of less than 20 employees to emerge from the COVID crisis stronger than ever. It is a statewide initiative supported by our community partners, and it will be running through this year and into 2021. So please be sure to check out upcoming sessions. If you have missed previous sessions or if there's information you would like to revisit, the recorded sessions are available for you to review on our website at azcommerce.com/small business bootcamp. Along with the recorded sessions are our Resource Collective page. The Resource Collective is additional statewide information to equip businesses to return stronger. Again, this list and information is on our website at azcommerce.com and includes information regarding many different industries and COVID recovery information. So please, if you have the time, please check out that Resource Collective as well. Some updates. This week is National Tax Security Week. So if you were not aware, now you are, and there are different webinars happening all throughout the week that are listed on the screen. If you would like this rather long link sent to you, we can add that to the chat box. That way you don't miss out on anything that is happening this week. For additional COVID mitigation measures, we recommend that you visit our website, azcommerce.com/COVID-19, as well as take advantage of ACA's programs. The ACA has many different programs available to small businesses and businesses throughout Arizona. Everything from our small business outreach, from Arizona at Work to Arizona Manufacturing Extension Partnership, there are resources that are available for Arizona businesses and business owners. As a reminder, the small business checklist is something that if you are looking to start a business or expand your business, it is an interactive and intuitive online resource that helps to allow you to know the information for local, state, and federal levels as far as licensing and registration. So again, whether you are wanting to start, operate, or grow your business, this checklist is a great way for you to make sure that you are doing everything correctly. And again, that is on our website, azcommerce.com/smallbiz. For additional COVID-19 information and resources, please visit arizonatogether.org. And as I mentioned, we are on this December 1st, kicking off our 101st session. Thursday, we will be having our session at the same time, Small Business 2.0, developing a post-pandemic roadmap. But why you are all here today is for COVID-19 tax relief for individuals and small businesses. And this webinar is going to be presented by Lisa Novack, Senior Stakeholder Liaison in the Communication and Liaison Outreach Division of the Internal Revenue Service. Lisa has been so nice to volunteer her time with us again, and we are thankful to have her to give us this much needed information. So without further ado, Lisa, I'm happy to turn this over to you.
All right, thank you so much, Faith. I appreciate it. I'm going to try to maneuver here to share my screen, if I can find it here. Okay, that should be it. And I'm working on it. There it is. Okay. There we go.
We are all anticipating now.
Right. Building up the suspense. All right. see if I can get this slideshow started. There we go.
Excellent. Thank
All
you,
right.
Lisa.
Good morning, everyone. Finally, thank you. And thank you to ACA for inviting me to be part of this program. Also, for everyone's interest in this topic, I really appreciate you signing up for this session today. I want to apologize. I don't have a camera going today. Having a lot of connectivity issues, so I didn't want to risk losing connection by doing that. So believe it or not, we're coming upon another filing season, and it's almost time for you to file your tax return again, if you can believe that. It does seem kind of like we just finished up, but I guess in a way we did, since there was an extended due date last year. We're also still trying to work our way through all of the stuff that got backed up when we were shut down due to the pandemic. We also had those economic impact payments throughout it all. So it was a pretty hectic year for us, as I'm sure it has been for all of you as well. So today I wanted to highlight some of the benefits that are available for small businesses and individuals as part of the COVID-19 relief. I'm also going to go over some tips to think about as you get ready to file your tax return for next year. And finally, to talk about tax security and protecting your identity. So let's go ahead and get started. I'm going to start by talking about the employee retention credit. This credit was actually designed to encourage employers to keep employees on their payroll during the pandemic, when many businesses were forced to close or to cut back. So what is the credit exactly? Well, it's a fully refundable tax credit for employers. It equals 50% of the qualified wages, and this also includes the qualified health plan expenses that the employers pay to their employees. So it actually applies to qualified wages that are paid after March 12th of 2020 and before January 1st of 2021. Now, the maximum amount of wages that can be taken into account with respect to each employee for all calendar quarters is $10,000. So that means the maximum credit, since it's equal to 50% of those wages, would be $5,000. Now, the credit is going to apply against employment taxes. That would be specifically the employer's share of Social Security tax. All right, so this credit is actually available to all employers, regardless of their size, and it also includes tax-exempt organizations. There are two exceptions, though. One is for governmental employers. They're not eligible, as well as self-employed individuals for their own services and earnings. They would not be eligible for the credit that applies to their own services and earnings. Now, in order to be eligible, the employers must fall into one of two categories. The first one is if the employer's business is fully or partially suspended by a government order due to COVID-19, and this would be during a specific calendar quarter. Now, a business fully or partially suspends operations due to orders from an appropriate governmental authority that limits commerce, travel, group meetings, things that are commercial, social, religious, or, any other purpose really. But it's all based on COVID-19. The second category is if you experience a significant decline in gross receipts during a calendar quarter. So the employer's gross receipts would be below 50% of a comparable quarter in 2019. So you're going to look back to 2019 to see what your gross receipts were at that point. When you compare it to 2020, if your 2020 gross receipts are below 50% of what they were last year in the same quarter, then you would be eligible for the credit. Now, once the employer's gross receipts go above 80% of the comparable quarter in 2019, then you would no longer qualify after the end of that quarter that you've reached the 80%. All right, so I just pretty much went over what fully or partially suspended means, and it's all shown there on the slide. Let's talk a little bit about essential businesses. So an employer that operates an essential business is not considered to have a full or partial suspension of operations if they're allowed to remain open. And so this is going to be true even if the suspension affects the businesses around them, which would then affect their business. However, even though they're not considered an eligible employer as a result of the suspension part of its operations, the employer may still be considered eligible if it experiences the significant decline in gross receipts that we just talked about. So we do have a lot of information on irs.gov where you can go look to find out a little bit more information if you're curious about additional information. So I encourage you all to take a look, and I'll talk more throughout this presentation about what is included there as well. So we already talked about the significant decline in gross receipts. Of course, it's for the first quarter in which the gross receipts in 2020 are less than 50% of its gross receipts for the same quarter in 2019. And of course, it will end once you start recovering and reach about 80% of the gross receipts for the same quarter for 2019. Okay, so qualified wages. These are wages and compensations paid by an employer after March 12th of 2020 and before January 1st of 2021. Now, the qualified wages would include, as I said before, the qualified health plan expenses that are properly allocable to wages. Now, for this credit, the CARES Act doesn't require employers to pay these quote-unquote qualified wages. We're going to talk a little bit more shortly about the Family First Act paying paid sick and family leave, which is required, but this is not required. So the rules surrounding the credit actually depend on the average number of full-time employees that you had in 2019. So again, there's going to be a look-back period to 2019 so that you can make a determination as to the number of qualified employees with qualified wages. So if you look back to 2019 to determine how many employees you had back then, if you were an employer with 100 or fewer employees on average in 2019, then the credit is going to be based on wages paid to all employees. And that's regardless of whether they provided services or not. So if the employees worked full-time and they were paid for full-time work, you're still going to get the credit for that. And so this is if you have 100 or fewer employees. Now on the flip side, if you've got more than 100 full-time employees in 2019, then the credit is going to be allowed only for the wages paid for employees for the time that they're not providing services. So if you've laid them off, if there wasn't enough work for them to do, but you continued to pay them, that's when you'll get the credit. But you won't get the credit for the people that continue working, that you continue paying. And that's with more than 100 full-time employees. Okay, so as we said, the credit is equal to 50% of qualified wages per employee. The maximum amount of the wages per employee for all calendar quarters is $10,000, and the maximum credit per employee is $5,000. And the website also has some examples to kind of give you an idea of the limitations and how you're going to apply those kinds of things. All right, so how do you claim the credit? One thing about this credit is it does allow you to be immediately reimbursed by reducing your required deposits of payroll taxes that have actually been withheld from employees' wages you could reduce it by the amount of the credit. So in order to claim the employee retention credit, you're going to report it, your total wages and the related health insurance costs for each quarter on the quarterly employment tax return. So that's normally the 941 for most employers. And this begins with the second quarter for tax year 2020. So the credit is actually taken against the employer's share of Social Security tax. Now, eligible employers can also request an advance of the employee retention credit. You do that by submitting the Form 7200, which is advanced payment of employer credits due to COVID-19. And keep this form in mind because we're going to talk a little bit more about it in relation to the Family First Act as well. All right, so an employer's ability to claim the employee retention credit can be impacted by other credits and relief provisions. And so, for instance, if an employer receives a small business interruption loan under the Paycheck Protection Program, then that employer is not eligible for the employee retention credit. Also, wages for this credit don't include wages for which the employer received a tax credit for the paid sick and family leave under the Families First Coronavirus Response Act, again, which we'll talk about shortly. Also, you can't use the same wages for paid sick and family leave under Section 45F. Employees are also not counted for this credit if the employer is allowed a work opportunity tax credit under Section 51 of the Internal Revenue Code. So, the CARES Act is trying to prevent this double dipping of the retention credit so that the employer's deduction for wages have to be reduced by the amount of the retention credit. So this page shows some of the resources that are available. As I mentioned, we do have a coronavirus tax relief web page on irs.gov. So you can find the FAQs for the employee retention credit there. We've got a news release 2020-62, which explains some more information. The Form 7200, the instructions for that will have a lot of additional information for you. And there's also publication 5419 that you might want to refer to get some additional information. Okay, so let's move on and talk about the Family First Coronavirus Response Act. I'm going to be referring to this as the Family First Act because there's a lot of words in that. So actually, this was signed on March 18th of 2020, and it came about to provide relief to small and mid-sized businesses and their employees. So basically, this act provides paid sick leave and expanded family and medical leave. This would be either for the employee's own health needs or to care for family members for reasons related to COVID-19. And so the act actually created the refundable paid sick leave credit and the paid family leave credit for eligible employers. So everybody's going to benefit from this. So basically under the act, the small and mid-sized businesses with fewer than 500 employees can begin taking advantage of these two new refundable employment tax credits. They're designed to immediately and fully reimburse them dollar for dollar for the cost of providing COVID-19 related leave to their employees. Now, this gives businesses with fewer than 500 employees the funds to provide the employees with the paid sick leave and family and medical leave for reasons related to COVID-19. So the eligible employers will be able to claim these credits based on qualifying leave that they provide between April 1st of 2020 and December 31st of 2021. Now, under this act, there are equivalent credits available to self-employed individuals based on similar circumstances. So unlike the employee retention credit, self-employed individuals for their own circumstances would be eligible for the Family First, the credits that fall under that act. So there's really kind of three arms or three branches to this act that cover, the first part of it is emergency paid sick leave, and this would be paid sick leave for the employee themselves. So if you have an employee who is unable to work for reasons due to COVID-19, they would be entitled to paid sick leave for up to a total of 2 weeks, which would be an equivalent of 80 hours, at the employee's regular rate of pay. And it's up to $511 per day, which would then equal $5,110 in the aggregate. So for, all 80 hours is the maximum amount that you could pay towards that. So the eligible individual or the eligible employer is entitled to a fully refundable tax credit equal to that required paid sick leave. Now, the employers must provide the paid sick leave if the employee is unable to work or even telework due to one of the circumstances that are shown on the screen. So if they're under a quarantine or isolation order, or maybe the employee has been advised by a healthcare provider to self-quarantine, or even if the employee is experiencing symptoms of COVID-19 and is seeking a medical diagnosis. Okay, the second branch would be then paid sick leave to care for maybe a family member. So an employee who is unable to work, again, due to COVID-19, they would be entitled to the paid sick leave for up to a total of 2 weeks, again, 80 hours, but it would be at 2/3 of their regular rate of pay, or up to $200 per day, or $2,000 to cover the whole 80 hours. So then the employer is going to be entitled to a fully refundable tax credit that's then equal to the required paid sick leave that they paid. Now, again, the conditions would be if the employee is caring for an individual who is subject to a quarantine or isolation order, or maybe has been advised by a healthcare provider to self-quarantine, or maybe the employee is caring for the child or for their own child, if the school or place of care or their child care provider is unavailable due to, again, this is all related to COVID-19. And then finally, if the employee is experiencing any other substantially similar condition specified by the U.S. Department of Health and Human Services. Okay, so the third branch of this would be for paid family leave. And so in addition to the paid sick leave credit of 80 hours under the expanded FMLA, employers must pay eligible employees for periods of leave due to COVID-19 if they're unable to work due to the need to care for a child, if the child's school is closed, or if their place of care is closed, or again, if the child care provider is unavailable. So in this circumstance, the employee is entitled to paid family leave and medical leave equal to 2/3 of the employee's regular pay. That would be up to $200 per day, $10,000 in total. And so it would be up to 10 weeks of qualifying leave. All right, so eligible employers would be businesses and tax-exempt organizations with fewer than 500 employees that are required to provide emergency paid sick and emergency paid family and medical leave under this act. So again, the employers will be able to claim these credits based on the qualifying leave that they provide between April 1st of 2020 and December 31st of 2020. And as I mentioned before, the equivalent credits are available to self-employed individuals based on similar circumstances. Okay, so the Family First Act, this part is really overseen by the Department of Labor. You know, IRS just has a role in it because that's where it's claimed, but Department of Labor is actually the one to oversee this whole program. And so the act actually permitted the Department of Labor to provide some rules that a business with fewer than 50 employees can use to claim an exemption from having to provide this paid sick leave and the expanded family and medical leave if it would jeopardize the viability of their business as a going concern. Any business that claims the exemption is not entitled to tax credits for any qualified leave wages that they are exempt from providing. All right, so one other thing to note is that the FFCRA, or Family First Act, permits employers whose employees are healthcare providers or emergency responders not to provide qualified sick leave or qualified family leave wages to those employees. And I assume that's because they're essential. So if you want some more information about the Family First Act, you can actually go to the Department of Labor's website and look for Families First Coronavirus Response Act questions and answers. So that's all there for you. All right, so how would you claim the credit? Well, the employers are going to be able to report their total qualified leave on their quarterly federal employment tax return. So again, this is usually the Form 941, which is the employer's quarterly federal tax return. So this is used to report income tax, Social Security, and Medicare taxes that have been withheld from, or withheld by the employer from the employee wages. So this means that in anticipation of claiming the credits on the Form 941, the employers can actually retain the federal employment taxes that they would otherwise have deposited. So that's kind of what generates for the credit. Now, if you don't have enough of those taxes withheld to cover the entire credit, again, you can use that Form 7200 to claim an advance payment of the employer credits. Now, for this, as well as the employee retention credit, it's very important for you to keep your records. So you want to make sure that you retain records and documentation that's related to and that supports each employee's leave. And this is so that you can substantiate the claim for the credits, as well as you want to retain the Form 941, which would be the quarterly federal tax return. If you file the 7200, you want to make sure you keep a copy of that. And anything else that you might have filed with the IRS requesting the credit, any other records that you have that's going to back up any of these credits that you're taking. This slide shows you some additional resources. Again, we've got our coronavirus tax relief page on irs.gov that will provide you more information related to both individual and business tax relief. We've got some frequently asked questions, and then of course the Department of Labor website has a lot more information on there as well. There's a link also to the Treasury website, so if you wanted to read, if you have a lot of time on your hands and want to read the bill, you're welcome to go there and take a look at that as well. code. Come on. Oh. I think I went too far. Hang on just a second. Let me see. Sorry about this. Technical difficulties. All right, let's try this again. All right, so as I mentioned, I also wanted to cover some of the tax relief for individuals beyond just what's available for businesses. So under the CARES Act, it does include relief for taxpayers who are affected by the coronavirus. So the 2020 recovery rebates for individuals, you might be familiar with the economic impact payments. Those were issued throughout the year. So for those who were eligible for a payment, but maybe they didn't receive it for some reason, or maybe they didn't receive the full amount of the credit, you can actually claim what's called the recovery rebate credit by filing a tax return for 2021, and then you'll be able to claim the credit on there. So when the 2020 tax return forms come out next year, you won't be looking for the economic impact payment, you'll be looking for the recovery rebate credit. So I'm sure everybody's familiar. The credit is actually a $1,200 payment or $2,400 if married. This goes to taxpayers with adjusted gross income of up to $75,000 or $150,000 if married, and an additional $500 per child. Now, there's also some special rules allowed for the use of retirement funds for qualified individuals, of course. So this is for those who have had to withdraw funds from their retirement plans to assist financially through the pandemic. So a qualified individual is anybody who is diagnosed or whose spouse or dependent is diagnosed with the virus by a test that's approved by the CDC, including a test authorized by the Federal Food and Drug and Cosmetics Act. Other qualified individuals would be somebody who experienced adverse financial consequences as a result of the individual or their spouse or even a member of their household being quarantined or furloughed or laid off, or even having their work hours reduced due to COVID-19. So the special rules that come under here would be that they waive the 10% early withdrawal penalty for distributions up to $100,000 from qualified retirement accounts. These would be made on or after January 1st of 2020. The rules say subjects income attributable to distributions to tax over 3 years. So that means that you won't have to pay the tax on that distribution in the first year that you take it. You can spread it out over a 3-year period. You also have the option to recontribute those funds to an eligible retirement plan. If you do that within 3 years, it's not going to affect the cap. So a lot of these plans have a maximum amount that you can contribute to them. But with this, there's not going to be a cap if you are repaying those funds into that plan. The special rules also provide some flexibility for loans from certain retirement plans for coronavirus-related relief. So we do have some additional information again on irs.gov. We have a news release specifically related to the retirement plans there as well. All right. So another benefit would be a temporary waiver of required minimum distribution rules for certain retirement plans and accounts. And these would be commonly known as Rmds, the required minimum distributions. So the Act actually waives the required minimum distribution rules for certain defined contribution plans and IRAs for calendar year 2020. And so we do have Notice 2020-51 that provides a lot more information about that. Again, you can find that on our webpage. There's also an allowance of a partial above the line deduction for charitable contributions. So what this does is it actually permits taxpayers to deduct up to $300 of cash contributions to charitable organizations. And this is whether they itemize or not. You know, a lot of people aren't able to itemize. It's more beneficial for them to take the standard deduction. So they lost that ability to take the charitable deductions. So now under the Act, you can actually claim $300 in what's called above the line deduction. Now, for individuals, if they do itemize, it increases the limitations on the deduction for charitable contributions as well as corporations. So for individuals, the 50% of the adjusted gross income limitation is actually suspended for 2020. So there isn't a limitation of the amount that you can contribute. For corporations, the 10% limitation is actually increased to 25% of its taxable income. And then it also increases the limitations on deductions for contributions of food inventory, and that amount goes from 15% to 25%. So again, I just encourage you to take a look at our webpage just to see what is all there for you. Okay, so as I mentioned, I wanted to give you some tips on getting ready to file for next year, because this is really, you know, we're in December and filing season starts mid-January. I don't know how early any of you actually jump right into it that early, but just wanted to have some pointers here. So one of the things, especially with social distancing, you know, nobody wants to leave their house and go out to get information. So you can actually stay home, you can stay safe using some of the IRS online tools that we have. We've got a lot of filing resources and we've got other services that you can use. So I wanted to highlight some of those for you today. So for those of you who don't know, IRS actually has tax information available in up to 6 languages on irs.gov. There's a language tab that's located in the header on irs.gov. You can select a language other than English. So there are some accessible forms and publications available for people with disabilities as well. We also have what's called the Let Us Help You page. And this features links to information and resources on just a wide range of different topics. You also have the option to view your own personal federal tax information. If you visit irs.gov/account, you can either create an account, or if you've already got some kind of login, to securely view your balance and payment history. So if you're looking for any information about, you know, if you still owe on something, how much you owe. You can also see some key information from your most current tax return as it was originally filed. So if there were any changes made to it afterwards, you wouldn't necessarily see those. But you can also do things like select an electronic payment option. You can go directly to request a transcript on our Get Transcript in order to access any of your tax records. And then we also offer several different ways for you to stay updated on important tax information that might help you get ready. So in addition to irs.gov, we've also got a mobile app. It's called IRS To Go. So it's IRS with the number 2 and then GO, and you can find that in your app store. We've also got YouTube videos. We've got a whole YouTube channel that highlights a lot of different information for individuals, for businesses, for tax professionals. And then another way to stay informed, and you might not have thought about this before, but you can follow us on Twitter or Instagram to get some of the more recent messages that we're sharing. You know, as Faith mentioned earlier, it's National Tax Security Awareness Week, so we are putting out a lot of information on just identity theft and cybersecurity and that kind of thing. So kind of take a look at it and see what, you know, maybe you'll learn something there. All right, another thing I want to encourage you to do is take advantage of e-file. You know, filing electronically really is the most accurate way to prepare and file your tax return. Any errors would delay your refund, and the easiest way to avoid those is to use e-file. The tax preparation software is going to guide you through the process, and the biggest benefit is that it does all the math for you. We've found that e-filing really is the best way to do this, especially based on what happened during the pandemic when we had to shut down during filing season for several months. So those folks who e-filed, those returns were able to be processed. If you paper filed, if you made a payment, there was nobody there to open the mail, to process those paper returns, to process those checks. So it has created quite a backlog. So that's one thing to keep in mind. If you haven't quite gone down that avenue for e-filing, consider that for next year, just in case there's ever any issues. You know, along that line, there's actually 70% of all taxpayers who can use this free brand name tax software to prepare and file their income tax return electronically. It's the Free File program, and you can access that through irs.gov, and you can see if you're eligible for that. We also have free file fillable forms, and you can try to say that 4 times fast. But this is where all taxpayers, regardless of your income, can use these forms to fill them out online, and you can print them out and mail them in. But again, not really suggesting that you file a paper return. But in some circumstances, you may not be able to electronically file. We also have the Volunteer Income Tax Assistance Program, or VITA, as well as tax counseling for the elderly programs. So this would be senior citizens, members of the military, and also many other taxpayers depending on their income. So folks might qualify for free tax return preparation and electronic filing through these programs. Okay, and then let's talk a little bit about the economic impact payments. I did mention those earlier. Again, if you did not, or well, if you received the economic impact payment, you're not going to need to include that payment as taxable income on your 2020 tax return. So you're not going to have to pay income tax on that payment. It's not going to reduce your refund. It's not going to increase the amount of tax you owe when you file your return next year. Now, if you did receive the economic impact payment, you should have also received a Notice 1444, which is titled Your Economic Impact Payment. We do advise you to keep a copy of that notice for your tax records. That's just going to show you whether or not you received the correct amount. So again, as I mentioned earlier, if you did not receive the full amount, you might be able to claim that recovery rebate credit if you meet the eligibility criteria and you didn't receive the full amount. Again, for additional information, we do have tons of economic impact payment information on the Economic Impact Payment Information Center. Lots of frequently asked questions on there. We tried to, as we got the questions coming in, We tried to post those for everyone to see, so that, because if one person had that question, probably lots of others did. So you can always refer to that. All right, unemployment compensation. You know, in 2020, many people received unemployment compensation as part of the CARES Act. So just a reminder, unemployment compensation is taxable. And so that has to be reported on your income tax return. In most cases, the states issue a Form 1099-G, which indicates how much you received. I don't recall if Arizona actually issues the hard copies, or if you're going to have to log into your account to get that information. So that's one thing you want to check into before you start filing your return. So that 1099-G is going to report the amount of unemployment compensation and any federal income tax that you might have had withheld. So you want to make sure you include that information on your 2020 tax return. We do have more information on unemployment benefits in publication 525. Again, you can get to that through irs.gov. Another thing to think about is you want to make sure you review your eligibility for credits and deductions. So, you know, these can mean more money in your pocket. And so if you think about the eligibility now, it might make it a little bit easier. So credits like the child tax credit and the dependent care credit, the education credit, the earned income tax credit. So you want to take a look at those things and make sure you have the records that are going to help you when you prepare your return to determine if you're eligible. You also want to take a look at life events and review those, because there might be something that you're eligible for that you're not used to. So things like purchasing a home, going to college, losing a job, they might make you eligible for certain benefits. So if you find out about your eligibility now, it might help make filing easier next year. There's other circumstances also. So things like maybe getting married or divorced, maybe having a baby, experiencing the death of a spouse or a dependent that you can claim. These things could also affect your tax benefit eligibility as well as your filing status. So we do, again, have a page for that. You can go to irs.gov/life events, all one word, to learn more about specific events that might impact your taxes. Getting ready for your refund. So, you know, different factors can affect your refund, but we try to caution people about not counting on getting a federal refund by a certain date, especially if you plan to make like a major purchase or pay some other kind of financial obligations. You know, it's Christmas time. Oh, okay, I'll charge this and I can pay it off with my tax refund. You can't always count on that. We saw that especially with this filing season. But, you know, the IRS does issue most refunds in less than 21 days. However, it might be possible that your return may require additional review, so it could take a little bit longer to get that refund. And also, if you claim the earned income tax credit or an additional child tax credit, you know, by law, the IRS can't issue your refund before mid-February. So this time frame actually applies to the entire refund, not just the amount that's associated with those credits. So there could very well be a delay in getting your refund. And then, of course, if you combined your electronic filing with direct deposit, that's really going to be the fastest way to get your refund. One note about this past filing season, you know, the IRS actually sent interest payments to individual taxpayers who timely filed their 2019 federal tax returns by that July 15th deadline, and if they received refunds. So most of the interest payments were received separately from the tax refunds. So by law, these interest payments are actually taxable. So anybody who received them must report the interest on their 2020 federal income tax return. So the IRS will send a Form 1099 INT to anyone who received interest totaling at least $10. So again, that would have to be reported on your return. Also, another thing to take a look at is whether you need to adjust your withholding. Did you receive a smaller refund than expected last year, or maybe have an unanticipated tax bill? You might want to go in and use the Irs Tax Withholding Estimator to help decide if you need to adjust your withholding, or maybe even make estimated or even an additional tax payment. For employees, if you go through this and decide that you need to make some changes to your withholding, you would submit a new Form W-4 to your employer to make any kind of an adjustment. You can also make estimated or additional tax payments if the withholding from your salary or pension or other income doesn't cover the income tax that you're going to owe. So you can always go to irs.gov/payments, and you can make secure electronic payments with your mobile device using that IRS To Go app that I talked about earlier. And then also, you want to make sure that you're protecting your data. So, the IRS, the states, as well as the tax industry, we're all committed to trying to help protect you from identity theft. So the next few minutes, I want to take a look at some of the things to consider to protect your data and to help prevent tax-related identity theft. So as Faith mentioned earlier, it's Happy National Tax Security Awareness Week, I guess I should say. I think one of the reasons why we do it this time of year, this is the fifth annual week that we're celebrating. So this time of year really is not only the holiday shopping season, but it's really also hunting season for identity thieves. Also this year, there's really a heightened need for security because the fraudsters are out there trying to use the COVID-19 situation to scam taxpayers and also tax preparers. So you really want to be on the lookout for coronavirus scammers. Everyone really should be alert to any phone calls, texts, or emails about coronavirus or COVID-19, including the economic impact payments. These scams can lead to tax-related fraud or identity theft. So just a couple things to keep in mind is the IRS is not going to call, email, or text you to verify or to request your financial, banking, or personal information. We just don't do that. You also want to watch out for websites and social media attempts to request money or personal information. You always want to make sure you go to the official IRS website, which is irs.gov. From what I understand, you don't want to go to irs.com, so kind of cross that off your list. Also, just watch out, don't open unexpected emails that look like they're coming from the IRS, or don't click on any attachments or links of things that you're not expecting or don't appear to be legitimate. Also, don't engage with potential scammers. And one thing to keep in mind, we don't take gift cards. So if somebody calls you claiming to be from the IRS and says that you have a balance due and you have to immediately go out and get gift cards and give them the numbers, that is definitely a scam. So if you do get a suspicious email of some kind, we do have an email address. It's phishing@irs.gov, and that's, of course, phishing with a PH. And so, as I mentioned, the IRS is concerned about keeping you safe. Thieves actually target your personal information so that they can file fraudulent tax returns in your name. And there's really just too many individuals, businesses, and tax professionals who continue to be victimized by scams and schemes related to identity theft. So really all of us have to be on guard, and we need to make sure that we use the strongest security measures that we can. So the IRS and its partners really have been out there encouraging taxpayers to help us in this fight by taking steps themselves to protect their data. So everyone has a role to play. So here's a few things to keep in mind. To protect yourself online, you want to make sure you use security software for computers and mobile phones, and make sure you keep it updated. Have it update automatically if possible. Make sure you protect your personal information. Don't hand it out to just anyone. You want to make sure you use strong and unique passwords for your accounts, and use two-factor authentication wherever possible. Make sure that you're only shopping on secure websites. So you want to look for the HTTPS in web addresses, and also avoid shopping on unsecured and public Wi-Fi. And always, always, always back up your files on computers and mobile phones. And, you know, we often focus on individual taxpayers as businesses of tax, or as victims of tax-related identity theft, but actually businesses also can be victims. And identity thieves love that they can reach more people's data through this route. So they can actually steal businesses' employer identification numbers, those are called EINs, and use them to file false tax returns. They might even convince you to provide employee personally identifiable information to them. And then with more and more taxpayers and taxpayers working remotely, the identity thieves are also trying to use COVID-19 to scare and scam people out of their identities or money. So all of us really have to be on guard and use the strongest security measures that we can. So finally, as the holidays approach, you know, many of us are going to be with family and friends. I just want to put out there that you might want to think about keeping in mind to look out for your family and friends who might be at risk for identity theft. We all know someone who can be tech challenged, and they can be at any age or from any walk of life. I know I had to have that talk with my mother after she fell for a scam. So keep that in mind. You know, if you've got an elderly parent or a neighbor or an aunt or an uncle, or even, you know, your young children, you want to talk to them about these things, about being safe out there. Make sure everybody's safe on the web, make sure they have antivirus software and a firewall and things like that. We've got additional information on irs.gov, so please take a look at that, and if there's anything that you can share. And with that, I want to thank you very much for your time. I'm sorry I went right up to the time. Did we have some questions?
Yes, Lisa, we have a few questions. And I know we are short of time. So the question that is most prevalent in our Q&A box is, if a business receives PPP, are they eligible for the Family First Coronavirus Response Act?
It depends. The answer to that is it depends. Here's what I will do, because I got a couple of questions in beforehand too. How about if I provide you with a written response and we can provide it to all of the attendees, and I will also provide a written response to the questions that I already got.
Fantastic.
Okay, and that way we won't have to keep everybody on the line past the time.
Thank you, Lisa. So as Lisa just mentioned, she will answer your questions in text, and we will send those out to all of you who have registered for today's webinar. So please be on the lookout for that email. Also, as a reminder, today's webinar, as well as our previous bootcamp sessions, will be on our website at azcommerce.com. So if you want to revisit today's information, or if, like I said earlier in today's presentation, if you would like to go over a previous presentation, all of those recorded sessions are on our website. So thank you so much, Lisa, for your time. Thank you for those safe reminders for not only ourselves and our businesses, but those around us. And again, happy National Week. And we hope that you all return Thursday with this information. And again, we'll be sending out those email question and answers out later today. So thanks so much for joining us, and have a great day.
All right, thank you, Faith. So do you want to forward all those questions to me, and I'll try to answer them?
Not a problem.
Awesome.
right.
Thank you.
Thank you and have a great day. Bye.
You too. Bye-bye.